The global economy is facing a number of challenges, and banks are among the industries that have been struggling in recent years. These challenges have been brought about by a changing economic landscape, technological advancements, and geopolitical shifts. Banks have always been the backbone of the economy and play a critical role in lending and investing. In addition to these factors, the Silicon Valley crash in 2023 has the potential to cause significant economic disruption, and banks will be among the industries most impacted. The financial industry has undergone significant changes over the past decade. The 2008 financial crisis was a wake-up call for the industry, and since then, banks have been striving to improve their risk management and compliance practices. In addition, regulatory changes and increased scrutiny from regulators have forced banks to focus on improving transparency and accountability. Despite these efforts, banks are still struggling to keep up with the rapidly changing economic landscape. One of the main challenges facing banks into the Silicon Valley crash is the potential for a significant increase in loan defaults. Silicon Valley is home to many high-growth startups and tech companies, and a crash in this sector could lead to widespread business failures and layoffs. This would increase the risk of loan defaults, as businesses would be unable to repay their loans. Banks would be forced to write off bad loans and set aside larger reserves to cover potential future loan losses. This would put significant pressure on bank balance sheets and would make it more difficult for banks to lend money to businesses and individuals. The increasing competition from fintech startups is also putting pressure on banks. Fintech companies are leveraging technology to offer financial services that are faster, more convenient, and often cheaper than traditional banking services. This has led to a shift in customer preferences, with many customers opting for fintech services over traditional banking services. Banks are now struggling to keep up with the pace of technological change and are investing heavily in digital platforms to improve their operations and enhance customer experience. To address these challenges, banks are looking to adapt to the changing economic landscape and leverage new technologies to improve their operations and better serve their customers. This includes investing in digital platforms and artificial intelligence to improve efficiency, reduce costs, and enhance customer experience. Additionally, banks are looking to expand into new markets and diversify their revenue streams to reduce their reliance on traditional banking services. Another strategy being employed by banks is to focus on environmental, social, and governance (ESG) factors. This includes investing in sustainable and socially responsible projects and businesses, which can help banks improve their reputation and attract socially conscious customers. Many banks are also investing in green energy and climate change mitigation projects, which not only align with their ESG objectives but also offer new revenue streams. The banking industry is facing significant challenges in the current economic environment. The Silicon Valley crash in 2023 could further exacerbate these challenges, and banks will need to adapt quickly to the changing economic landscape if they are to survive and thrive in the years ahead. This will require a focus on innovation, technology, and ESG factors, as well as a willingness to embrace change and adapt to new market realities. Only those banks that are able to adapt and innovate will be able to thrive in the new era of banking. Another area of concern in the aftermath of the Silicon Valley bank crash is the impact it has had on the wider economy. Banks play a crucial role in the economy, providing the financing and capital that businesses need to grow and thrive. When a major bank like Silicon Valley Bank experiences a crash, it can have a ripple effect throughout the entire economy. One of the most immediate impacts of the crash was the freeze on lending and credit that occurred in the days and weeks after the crash. Businesses that were in the process of securing financing from Silicon Valley Bank found themselves in limbo, unsure of where to turn for the funding they needed to continue their operations. This freeze on lending had a knock-on effect throughout the economy, as businesses were unable to invest in new projects or hire new employees. The result was a slowdown in economic growth, as businesses were forced to cut back on their operations and consumers became more cautious about spending money. The impact of the Silicon Valley Bank crash on the wider economy is still being felt, and is likely to continue to be felt for years to come. However, there are some reasons for optimism. Many businesses have adapted to the new reality of the post-crash economy, finding new ways to access financing and investing in new projects that are less reliant on traditional banks. Experts predict that the fallout from the Silicon Valley Bank crash will continue to be felt for years to come. The financial system is still reeling from the shock, and investors and consumers alike are struggling to regain their confidence in the banking system. One of the most significant impacts of the crash has been the rise of alternative forms of financing. Crowdfunding, peer-to-peer lending, and digital currencies have all gained popularity in the wake of the crash, as consumers and businesses look for ways to bypass the traditional banking system. This trend is likely to continue in the years to come, as the banking industry continues to grapple with the fallout from the crash, while traditional banks are working to regain the trust of their customers and investors. Alternative financing options are becoming increasingly attractive. In addition, the crash has prompted a renewed focus on innovation and entrepreneurship. Many individuals and businesses are looking for new ways to create value and drive economic growth, whether through new technologies, new business models, or new approaches to financing. Ultimately, the long-term impact of the Silicon Valley Bank crash on the economy will depend on how well the banking industry and the wider economy are able to adapt to the new realities of a post-crash world. While there are sure to be challenges and setbacks along the way, there is also reason to be hopeful that the economy will emerge from the crisis stronger and more resilient than ever before.